The US dollar is now at a 2-month high versus the yen and a 2-month high against the Swiss franc. So why are some of the top investors in the world wagering that the US dollar's highs are imminent after it reached generational highs last year? They think the Fed Fund Futures price rate of 5.4% will occur in September, also known as the terminal interest rates. That was until today. According to recent strong data, the Feds will likely need to raise interest rates more than anticipated. Fed Chair Jerome Powell told U.S. lawmakers this morning that the Fed is prepared to take more drastic action. Powell said in prepared remarks for a hearing before the Senate Bank Committee that the recent economic statistics have come in stronger than anticipated. So on the news, the US dollar rallied and all other major currencies that trade against the US dollar declined. So how high can the US dollar go from current levels? Let's just go to the charts. Let's start with the monthly chart. We can see price broke out of this multi-year range in May of last year. Typically, upon a breakout, price returns to the origin of the breakout. And so that's what we have right here. Price is just bouncing from the origin of the breakout. We could also see the 13 simple moving average. That's still pointing up. And at this rate, the monthly candle of March is going to potentially close above the moving average, which will be bullish news. But again, we got about 3 weeks left before that candle closes. So why did price stop going higher, started going lower? Let's just go over to the charts here. Well, we can see back in 2001, prices made highs and started to decline. I'm looking at this pivot low here. Let's just see where that lines up. You can call this an M pattern. And let's see where that would have lined up. Look at that. Okay, so we now know that there are monthly sellers up at this level here, right? And we're going to color code that yellow. And we'll say that's monthly sellers at 113. Okay, let's go down to now before we go down to smaller time frames, you can see this long extended range red candle back in November. So on the monthly chart, there are no sellers until you get to the 113 level on the monthly chart. Let's go down to the weekly chart. And again, you can see price put in a low of 186 back in late January, and that started rising. It's now closed above the 13 simple moving average. We haven't seen a close above the 13 simple moving average. The last time that happened was back in October. You can see last week the dollar sold off, but now this week it's rising. Let's go down to the daily chart. So currently price is testing the 100-day moving average. I think potentially we close above the 100-day and eventually gets up to the 106.50, which is where the 200-day moving average is at. Along with the 100-day moving average. That level is also at a weekly major support resistance level. Resistance, support, 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 resistance, resistance. Let's just go down to the 4-hour chart just to see if we can okay, so currently price is testing the sellers, or what was selling back in the 6th of January. This must have been on news. So if price takes out this level here, again, which is supported by a major weekly support level, if price close above we're going to call this, we'll just say 105, 105.75. If price closes the 105.75 level on the daily chart, again we're looking at the 4-hour chart, and what you can see that there are no buyers until we get up to the 107 level. And it's no longer fresh, it's just reacting to what was previously sellers back in November. So price has breached the 105 level, 75. The next target would be 107. But I don't think that level would hold. Because it's been used up. So if we go back to the daily chart, here are the two major levels that I'm watching. A close above 105.75. Price is going to test the 106.50, which is the 200-day moving average. If it breaches that, price is going to test the 107. any market, price is always gravitating to the levels where there is a lot of liquidity. Could we retest the monthly zone? It's quite possible if the Feds are going to continue to raise rates and keep rates higher for an extended longer period of time. So this is a chart that I will be paying attention to because everything in the world trades against the US dollar, since the US dollar is the world currency. Until next time.